All right, let's talk about deferred expenses. Basically, the idea is that a company pays for something in advance and initially records it as an asset because they haven't gotten the service yet. They haven't used the services of someone. So the amounts paid for in advance are initially recorded as an asset, and you wait to expense them. You'll expense them when you do finally get the service. Okay, so we'll go through this example. We have on April 1, par for the course paid $900 for 6 months of insurance beginning on April 1. So on April 1, the entry that was made is they got an asset called prepaid insurance for $900, and then what they gave was cash for $900. So they would debit prepaid insurance and credit cash. Now you'll see here this is $750 because what I'm showing you here is May 1 or April 30th balances. If you think about it, back in April they used some of that prepaid insurance. They got insurance coverage for the month of April. So this 900 covers 6 months. So every month it's $150 of service that they consume. So the prepaid insurance will come down by 150 or get reduced by 150 every month when you make adjusting entries. So now we're going to do May's. So the adjusting entry for May, what you're going to debit is insurance expense, and that's the amount that you've consumed during that period. That's the coverage of insurance you got. You're not crediting cash because you paid for this before already. What you'll be giving up, which you'll give is some of this asset up. The posting to the ledger, the T accounts, you'll have 150 to insurance, and you'll credit prepaid insurance for 150, leaving us with a $600 balance. And then the insurance expense is the amount used of 150. So as we have seen before, this will tell us how much was used. It tells us nothing about what was paid. In fact, there will be nothing on the statement of cash flows. If I had shown you the cash account here, you'd see no credit to cash in the month of May because that credit to cash for 900 was booked back in April. All right, so the balance sheet's going to explain this difference. It's going to say, okay, you used 150, you paid nothing, but that's because you had paid for amounts in advance. The 600 is 4 months left of use. That will be adjusted each month as you get the service. So this is another example of the expense recognition principle. You don't record the expense until you get the service. It doesn't matter whether cash went out or not.